This video is going to be about permanent insurance. I'm frequently asked, what is the best type of policy to have? And the answer that I give sometimes surprises people. And the answer to that is one that is in force when you need it. And that's actually the best policy to have. Again, there's going to be permanent policies and term. And when a permanent policy is put together, it is the cost of insurance plus overhead and profit equals premium. If you put in more premium, you're going to build cash value. If you put in less, the policy will lapse. But we know how to make this calculation. So as an example, if you were 50 years old and you decided you wanted $250,000 worth of permanent insurance, then we would just calculate it so that there would be no cash value of any kind. Remember that any policy that you buy is a term policy if you stop paying the premium. But if it goes over on a term policy, in other words, as an example, for a term policy for a 40-year-old male, 10 years, it's going to be about $25 a month. The first month of the 11th year, it goes up 10 times to about $250 a month. So you may get some people on the phone that will tell you, well, you can always just keep extending it, but the price to do that is so high that most people will not. Again, I purchased a policy when I was 50 years old, had a heart attack at 58, and the policy went till age 80. So I didn't buy a 10-year policy and didn't buy a 20-year. I spent a little more for 30, but when that 11th year started, my policy was still in force, and it didn't cost much more to do that. So I very, very rarely recommend a 10-year term policy. If you want a term policy and you want to spend the least amount of money that you can, that's perfectly fine. But you buy it 20 years or 30 years, and after that 10th year, have a meeting with your family and just decide if you want to continue with it. If you don't, just stop it. But if something happens, like happened to me, then you won't have any choice if it's 10 years. That's the reason that product is so inexpensive. There's a reason for everything, okay? So, again, we calculate for no cash value. It can either be universal life or it can be what's called term to 100. Depending on your health conditions, we'll pick the right company that has the right product for you. There's also what's called a legacy builder. And when you have permanent insurance, it's an asset. It's not just a product. So I had a friend of mine, he was 40 years old. His father was 65. He was a doctor. He'd worked hard when he was younger, hadn't been able to save much money, but now he had a lot of money and he saved a fair amount of money. So he bought a $500,000 policy on his father. He paid $10,000 a year for it. His father passed away in 15 years. He was 80, which is pretty old for a guy. So he put in $150,000, got back $500,000 on his father, income tax free. So he was able to make up for all of those years. You could never do that with a 401k or an IRA because once you get above a certain limit, they don't let you participate in those at all. So what I'm going to ask you to do again is when we sit and talk, I'm going to ask you just to unload and just tell me whatever's going on with you, and I'll be able to pick and show you a couple of alternatives that you have for that.